Thank you,
Now,
Terryanne.
a surprise move there by the central bank where they lowered the CBR rate by 75 basis points to close at 6%. What is your analysis of what you think the central bank is, what message are they trying to send out?
First of all, you've correctly identified it as a surprise move. The market actually expected, most of the market players expected the rate to stay the same. But the Monetary Policy Committee decided to lower it by a massive 75 basis points. That's 3 times more than the previous rate cut of 25 basis points. One, it was a big surprise to market players. Two, we believe they are sending the message that the rates will continue to stay low, and they are likely to do everything in their powers to maintain interest rate stability.
Now,
yeah, they are likely to continue to play their role in maintaining interest rate stability and reduce volatility of interest rates. Previously, what happened is, for example, last week we had market expected the central bank to offer 91-day and 182-day treasury bill. Eventually, central bank took only 182-day. It took some time before we got an explanation why that happened. Eventually, today we saw an article done by the central bank governor. That gap of lack of information led to some concern by market players. And I think the Monetary Policy Committee is trying to allay those fears of interest rate volatility.
Now, still staying with issues related to the central bank, a report by the CBK governor says Kenya grew by 4.4% in the first quarter of 2010, which comes as great news. There's been a lot of pessimists within this particular market. What do you think are some of the major factors that helped to contribute to that particular growth?
As most of the financial years, agriculture played a significant role. It grew by 4.6% this first half of the year. For example, agriculture plays a significant role in the GDP growth. It contributes about 23% of the GDP. So it carries more weight when it comes to a growth rate. Also, closely followed by manufacturing, construction, and infrastructure sectors. Interesting to note again, in this second half, we expect, given that the Minister of Finance has proposed incentives towards construction and home ownership, we expect manufacturing and construction to continue to play a significant role in the GDP growth.
What are your projections, though, for, as we get into the second half of the year? Historically, this is the best season for agriculture. Usually the outputs are very high. On the stock exchange, the agriculture stocks perform better than most. The banks that, bank the agriculture sector, such as Equity, perform the best during the second half. In reflection of that, what do you see as the economic projections for the second half of 2010?
From where we stand, the second half still holds better promise and stronger performance than the first half. We have had very good rains, which feed into the agriculture sector. Inflation has continued to decline and stay low, driven by stable food prices and low food prices. Again, we expect agriculture to perform well. Financial services performed extremely well in the first half. Most of the banks delivering more than 30%, upwards of 30% growth, the big banks. Therefore, we expect to see even stronger performance in the second half. Again, in this budget, it was proposed, if you look at the total expenditure in infrastructure by the government, 23% of total government expenditure is supposed to go towards infrastructure. That will feed into manufacturing and construction. So we are very positive in the second half.
Let's just look at the role the private sector, will play in this particular growth. Central bank is very categorical that there needs to be a bigger push for, the private sector to get access to even cheaper credit. What role has the private sector played so far in the growth of the economy?
Private sector, of course, has played a significant role, but of course they can do more. But private sector can't just wake up and start playing the role the central bank expects, without significant incentives and strong signals. And probably that's one of the message the MPC was sending. They wanted to send strong signals to the private sector that they should not worry, they have the full backing of the central bank. We expect the government to continue to incentivize private sector to play a key role. Secondly, we expect the government to incentivize financial institutions to extend credit to the private sector. One of the major things we expect from the significant rate drop of the CBR is cheaper credit to private sector. We wait to see. I'm sure there's going to be a lag time, but certainly it's a strong positive message from central bank.